Hello friend, so in this video we will discuss about the direct taxation June 17 paper of syllabus 12. So let's start the ICWA CMA direct taxation paper June 2017 as we will solve this. So as you know, we'll start with the MCQ first, which will be of 20 marks as per the syllabus of 12. So let's start with first. Well, talking about the fill in the blanks, starting from the fill in the blanks, the first question is the maximum amount of deductible under the section of 80GG in respect of house rent paid by a self-employed individual is rupees how much per month. So the question is as per the section 80GG, guys, please read this properly. The section 80GG in respect of house rent paid by a self-employed. So what will be the individual employed per month? So guys, as you know, the HRA is mentioned in your salary slip. So usually HRA forms are a part of your salary and you can claim deduction for HRA. If you do not receive HRA from your employee and make a payment towards a rent for furnished or unfurnished accommodation. Well, basically in one line I will tell you what will be the answer. It will be 5,000 per month. That will be your answer. Okay, but there the condition will be the lowest of these will be the consider. Otherwise, the answer you can write 5,000 per month or 25% of total income of your salary. To exclude the long-term capital gain, short-term capital gain. But if you consider the long-term and the short-term capital gain, then the actual gain will be less than 10% of income. Okay, so basically if they will ask you about this, so answer gives is per month 5,000 per month can be allowed. Okay, so let's see the question number 2 now. The loss from the activity of owning and maintaining racehorse can be carried forward for how many assessment year? Immediately succeeding the assessment year for which loss was first computed. So look, see, if some person has put his money in racehorse and regularly is getting loss, so after the first computed year that he is getting loss, so up to how many assessment year he can like get this. So the answer will be for this, and such of loss can be carried out for the maximum 4 assessment year for being set off against the income from the activity of owning and maintaining a racehorse in subsequent year. It means if you're getting lost, then up to the 4 assessment year you don't need to pay the tax. Okay. Now let's see the question number 3 now. In order to qualify as long-term capital asset, share of a private limited company should be held for more than how many months immediately after the transfer. Just try to understand once again. I repeat the question. In order to qualify as long-term capital asset and short-term capital asset. Let's start this. Now this year this has been changed, but we will discuss as per the previous as well as this year. So will short-term capital asset as an asset which is held for not more than 36 months, which was the earlier concept was there, or less, a short-term is called short-term capital asset. For long-term capital asset, the condition was an asset that is held for more than 36. If it is 36 or less than 36, then it will becomes under short-term, and if it will be more than 36, then it will becomes under long-term. But financial year 2017-18 onwards, the criteria of 36 months has been reduced to 24 months. Okay, fine. So that will be your answer. So basically in this case, since it was the earlier question was there, so the answer will be for how more than 36 months should be the answer. For the next year it will be 24 months. Okay. And let's talk about the in case of under-reporting of income, the assessee is liable to penalty under the section of 270A for an amount of equal to how many percent of tax payable under the reported income. Suppose if some person is misguided, like there will be two options. I'll suggest discuss both the case, like misguided or under-reporting, whatever that he should have paid, but he under-reported only. The penalty rate will be 50% of under-reporting of income. and it will be 200% where the misreporting of fact. So two answer will be 50% only, but in case future if someone will ask you misreporting will be there, then it will be 200% penalty will be there. Now let's talk about the question number. Now next question will be here 5. The amount of standard deduction available in respect family pension received by the legal heir on this is 33.13% such as pension or how much amount, whichever is less. The question is, let's just try to understand the amount of standard deduction available in the respect of pension. The two types of pension will be the commutated and uncomutated. Talking about the commutated means what? Commutated means we have taken the whole amount at the time. So if you are central government, state government person, and you have taken the whole amount as a pension, like people used to take like whatever their lakhs, it really comes under they used to take at a time instead of per month or quarterly. So if you take the commutated way, the whole money you have taken at one at a time, this is a tax free for you. But if you are taking uncommutated way, per month or quarterly basis, then it will be taxed as a 33.13% of such pension or 15,000 rupees, whichever the less. Let's see the explanation here. So let's see. The pension received by the dependent family member of the retired individual is known as family pension, and it is considered as income from the other source. Okay. Well, dependent family member include spouse, children below the age of 25, unmarried daughter and all. Well, talking about the commutated pension which is received by the family member exempted from the tax because you have taken over at a time. So, however, in case of uncommitted pension, monthly or quarterly received by the family member, a sum of equal to 33% of such income or 15,000, whichever the least is exempted from the tax. So, if a widow, for example, let's understand with the help of example. So, if a widow receive a pension of rupees 20,000 per month, so ultimately he will get 2.4 lakh per year. Now, she can claim exemption of rupees 15,000, which is lower of 33.33% of that. So basically we'll consider the 15,000 only. So the exemption will be 2.4 lakh minus of 15,000. Means like the remaining amount will be 2.25 lakh because 2.4 minus 15,000. So 2.4 lakh minus 15,000 becomes the taxable and it will be hits as per the slab. So the answer will be 15,000. Is it clear? So once again I repeat, the amount of standard deduction available in respect family pension received by the legal heir or deceased is 33.13% such as pension or whatever the 15%, whichever the less. Now question is, when a trader opts presumptive income determination under the 44 AD, advance tax is payable on or before what previous year? So if we want to do the advance payment for this, if it is, and the guys who are having the 10,000 liabilities which is compulsory for the advance payment of tax, so it will be on or before 15th of March of the previous year. Let's discuss an explanation. Any person opting for the presumptive taxation scheme under the 44 AD is liable to pay whole amount of advance tax on or before 15th March of previous year. If he failed to pay the advance tax by the 15th March of previous year, he shall be liable to pay the interest as per the section of 234C. There are two sections we have read. 44 AD, which says that up to the 15th March of previous year, you have to pay the advance tax, or as per the section of 234, it will be paid by the interest if you did not paid at the 15th March. Okay. Now next question is, when irrespective of the period of holding of asset, profit arising to a block, depreciable asset from transfer of such asset is always taxed as a short-term capital gain or long-term capital gain. What will be the answer? Guys, let's try to understand the question. Irrespective of the period of holding. Basically, earlier we have in the previous question we have saw that what will be the period, like 36 months, less than 36 months, more than 36 months, or more than 24 months, whatever the case like. So irrespective of the period of month in this case, if it is depreciable amount, then what will be the tax, the capital gain? Let's see the explanation here. Well, look, see, holding of period will determine the nature of asset as we know. Even when a computation is made under the section of 50 Loss on transfer of other long-term capital asset is eligible set off for the deemed for short-term capital gain. Even if it is a long-term capital gain, but it is comes under depreciable, so into the section 50 it will be comes under the long short-term capital gain. So answer will be short-term capital gain. Now let's see if it is depreciable. It is clear. If it is depreciable, then it will be short-term capital gain. Now question number 8. The due date of filing return of income of assessment year 2017-18 of a company which is required to obtain a report under the section of 92E in respect of specified domestic transaction is. Once again I repeat, the due date for filing return of income of assessment year 2017-18 of a company which is required to obtain a report under the section of 92A in respect of a specified domestic transaction age. So let's see, talk about the question number due date of filing an audit report of financial year 2017 in case of person who is required to submit a report pertaining the or specified domestic transaction under the section of 92 is 30th of November. What will be the due date to fill the audit report of a specified domestic transaction will be what? 30th of November of 2017. So answer will be 30th of November 2017. Okay. Now next is question number 9. The amount received by a member of HUF as a share from the income of HUF is included or not included in total income. The question is, if it is a member of HUF and if we get the income of salary you can say, not the proper way, the share of the income, then it is whether it is tax free or not. So basically it will not consider the tax. Why not? Because the HUF, if you talk about the HUF, well, HUF is, you know what, the income of HUF is calculated on the same way as that of individual. So HUF itself is a, what you can say, itself is an entity and it is liable to income tax its own. Means the HUF is used to pay its own income tax, whatever the income it used to pay already. So the what you can say, the partner will don't need to pay the income tax for this. So that is the reason it will not be included. You can say the answer will be not included in this total income. So next question is of this fill in the blanks is Mr. X gifted 1 lakh to his wife. Mr. X, Miss X, this is his wife, who invested such a money in business and she suffered a loss of 20,000. So loss will be whether it is can be set off against the eligible of income or not of Mr. X. Just try to understand. As Mr. X has gifted 1 lakh rupees to Miss X, since as his wife he invested the money and she suffered the loss. So obviously Mr. X can have sold into the income tax because I have given to my wife to do the business, but she did not get, she got lost, so I can sold him into the income tax. Okay. Now next is question number will be choose the most appropriate alternative. Means MCQ will be there. So rate of surcharge applicable to a foreign company having total income of 8 crore. So it will be 2%. Answer will be 2%. Just try to understand the explanation. Well, the amount of income tax shall be increased by a surcharge at the rate of 2% of such tax when the total income exceeds 1 crore rupees but does not exceed the 10 crore, and at the rate of 5% if it is exceeded the 10 crore. So answer will be 2% since it comes under the barrier of 1 to 10 crore. But if it will be exceed, then it will be 10%. Okay, clear? Now next is income computation can disclosure standard are to be applied on computation of income under the head of. Once again I repeat, income computation and disclosure standard are to be applied on computation of income under the head of. So it will be both profit and gain from business of profession and income from other source. Just write down income and computation disclosure comes into both profit and gain as well as income from the other source. Okay, is it clear? Now let's see how. As per the section of 145, the income tax 1961 IT provided taxable income of SA falling under the head of profit and gain business or professional or income from the others shall be computed in accordance with either cash or permissile system of accounting which is regularly employed by the SA. Now let's see the next question. Now the next question, new plant and machinery acquired and put to use by the SE engaged in transmission of power is eligible for addition depreciation of what percent of actual cost? So guys, the 20% of actual cost is depreciation in plant machinery. Just try to others, let's just try to understand what is the rule of the government to give the incentive for manufacturing company. Income tax department give additional appreciation of 20% for new plant and machinery installed during the year of purchase. For machinery, generally rate of depreciation is 50%, 15% is try to understand guys. This may be also a question. Additional 20% depreciation will be available in first year for industrial undertaking and power generation distribution business. Now let's see the next question. Question number 4. Maximum amount of exemption available in respect of amount received under the voluntary retirement scheme. Guys, just try to learn this. Under the voluntary retirement scheme, it is 5 lakh. Okay. An individual can claim reduction from his gross total income in respect of expenditure from the medical treatment, dependent being a person with a disability to maximum limit. Look, an individual can claim a medical treatment for a maximum disability will be 75,000 rupees he can claim. For his individual can claim for 75,000 rupees, that will be the answer. Okay. Now like these two are very easy questions, so we have covered it very easily. And next is match the following. 5 questions are remaining. So will contribution of rupees 8,000 in cash by a company to a political party. So what will be this? So this will not be eligible for a deduction under the section of 80GG. Why? Let's see how we'll say that. As per this, and let's see the now. An enterprise, as per the rule, an enterprise or company make donation to a political parties. It's a government rule. They have made a government rule that an enterprise or private company can give a donation to a political parties. Also claim that the amount of tax deduction under the section of 80GG for the Indian income. But the condition is what this section is basically detailed in the rules of donation provide the Indian company to any political parties even on electoral trust. This donation can be done through an recorded mode of other than cash. But in this question that was in the cash, so it is not be considered as under of section 80 JGB. Okay, and you just saw this word electoral trust. Electoral trust means whatever the income that will be 95% should be used in that. In the funding and betterment of society. Commodity transaction tax. We're talking about the commodity transaction tax. So commodity transaction tax, let's see the explanation. So what is commodity transaction tax or CTT? Let's talk about this. CTT is a tax level on exchange trade commodity derivative in India on the lines of the securities transaction tax or STT, a tax imposed on the purpose and sale of securities and their derivative trade on a stock exchange in the local market. Well, it is allowed as a deduction in computing business income. Well, we're talking about the commodity transaction tax. Answer will be allowed as a deduction in computing business income. Allowed in a computing business. Where is the option? Allowed in the computing business. Okay, so it will be the answer, allowed as a deduction in computing business income. Now, forfeiture of advance tax received transfer of capital. Whenever you will get the advance in transfer capital, obviously it will comes under what? Income from the other source. So do we have the option? You have income from the other source. But guys, just try to understand. Whenever you get the advance of capital, then it will comes under the income of other caps. And rest from Sukanya Samriddhi account. So it has been started by the government, so it not comes under the total, not included in the total income. Let's see the explanation. Well, Sukanya Samriddhi Yojana is a small deposit scheme of Government of India meant exclusively for girl child, which is launched as a part of Beti Bachao Beti Padhao campaign. The scheme is meant to meet the education of marriage expenses of girls. This is not included in total income. And last question is amount of payable to the Indian Railway for use of railway assets. So basically it's allowed only on payment basis. That's all. This is all about the 20 marks question of the question first direct taxation. Okay, we have this was the syllabus 2020 12 June 2017 paper direct taxation intermediate examination ICWA. So guys, if you like the video, please subscribe the channel. I have a kind request to you and share the video with your friend so that it will be helpful for them as well. And please subscribe the channel so that the next video will get up to you and this will be helpful to you. Thank you for watching the video. My name is Mrityunjay.